The stock market journey can be pretty tough at times. So, like a teddy bear, hopefully I can provide you some comfort. So, here is some comfort for you. Recently, there was an interview of Michael Pinto, who's a well known money manager. And Michael Pinto is sounding the alarm because we're getting very close to something called a yield curve inversion. And he explains, why do you care if the yield curve inverts? And Pento's answer is because 9 out of the last 10 times the yield curve inverted, we had a recession. The spread with the yield curve is the narrowest it has been since outside of the start of the Great Recession that commenced in December 2007. The last 2 times the yield curve inverted, we had a stock market drop of 50%. So the market dropped and the S&P 500 lost 50% of its value. Well, that's down the road. So we have that to look forward to. What happened in the markets today? Let's take a look. We're going to start with the 6-month daily chart on the spiders. And as you can see, it was actually a fairly decent week. And today, Friday, was a decent day that we popped through the 20 EMA, bouncing off the 50 and up through there. So it was pretty decent, given the fact that the week we had a slow or a low trading week because of the holiday. But then today, Friday, was also pretty interesting, given that today was supposedly the start of the trade war with China, where both countries fired shots with tariffs on all kinds of products. And today's move up was encouraging, given that these trade wars oftentimes can get kind of messy. So, did the trade war really start today, or did it start 20 years ago? No need to enter that debate. So let's go ahead and take a look at the oscillators here into the MACD. A nice dish here as well. But the fast line hasn't moved through the slow line yet. It's approaching this 0 point. There's a possibility we could have a reflection like we saw here at that point, just a day or two of a reflection. Not sure. Probabilities in my mind, my estimation, maybe 50-50. But as you can see here, we just had a couple of days of a reflection back down, and then we were on our way once again. So that's a very real possibility. Moving here to the relative strength. Relative strength had a good bounce, and we're just heading on up, not really slowing down. Stochastic as well. Fast line move through the slow line, so that looks good. And then here you see the trading volume is a little bit lower than normal because of the holiday weekend. Into the Williams. Williams looks very good, heading on up. So no real problems here. So overall, it looks like we had a pretty good week through the daily charts. So now let's go to the weekly charts to see how that looks. And this is the 2-year weekly chart on the spiders. And it looks like here we came down and hit the 20 EMA and wrestled with it a little bit and then bounced on up here. So that looks decent. Into the MACD. The MACD came down, the fast line came down. Looks to be coincident with the slow line here. So not as strong as I would like to have, but I think the daily tells us that hopefully here in the near future we're going to kick that strength back up and head on up. Moving here into the MACD histogram, you can see a little bit of the hesitation here. We kind of came down to this point. We're at the 0 line, so hopefully we'll reflect back up and head on up. Relative strength looks like it has reflected off the 50, and hopefully that just continues on into next week and subsequent weeks. The stochastic as well shows a little bit of a weakness here in that we came down and now we're moving parallel. The fast line is moving parallel with the slow line. I'd like to see some separation in that fast line moving on up and away, kind of as it did here in this time frame. Like to see that, like to see a little bit more strength in there. And the volume is moderate, looks fine. Williams had the downtrend, then it hit here and reflected on up. and it looks like it's heading into overbought territory, which is not a real concern. Moving back here into the price chart, we've got some headwind. We've got the China trade war, and then we have the potential for future Fed rate hikes. So, and then combine that with the summer doldrums, with all the money managers and traders taking their vacations, we're going to have some headwinds here. Want to get up to that level there, which is probably consistent more or less with this previous high there. And then, of course, we want to get into the upper 280s, which is the previous high. So those three things, the trade war, the summer doldrums, and potential Fed rate hikes, is going to make this a difficult path. And so I think there's some trouble brewing. I think I read an article the other day talking about the Fed rate hike, that if that Fed rate hike comes, that's probably when we're going to have the yield inversion. So that's not good news. So we got to keep on our toes and keep stacking some cash, saving some cash for reserve to deploy when needed. So just be cautious. But for now, I think into next week and the week after should probably be decent enough moving on up. So for today, that's ChewDog Charts. Thank you.